Good afternoon to everyone out there who's on the call. Today's presentation is Project Renovation. This is a beginner's guide to renovation lending. So if you've been on any of my calls previously, this is, again, another 101 course, just getting you adjusted to renovation lending, what we have to offer here at REMN Wholesale. We'll basically go over what we offer and what the market's looking like now, and also how do you get your first renovation loan. So this is either a refresher or a 101 class. If at any point in time you have questions, please email them to us at webinars@remn.com. Okay? So this is me, Steve Rosetta. I'm the renovation lending manager here at REMN Wholesale. And obviously I will be presenting to you today. If you do renovation loans moving forward after today, you'll probably be in contact with me. I have a lot of, hands-on work with our customers or brokers to get these loans to the closing table. So we will be communicating, myself and your AE. So let's talk about what we're going to go over today. We'll briefly discuss what a renovation loan is, what the benefits are, what the process flow is on a file, how do we determine a basic loan amount, maybe for a pre-approval on purchase, what programs do we offer, what programs do we not offer, and also how to get started on your very first renovation loan. So, very basic. What is a renovation loan? I know there's a lot of you guys on the call that have never done these before. This is for you. And it's also a great time, side note, to get started. This summer, we are expecting a large increase in these types of loans through our door. So if you start training now, you start marketing now, you'll see a lot of business come the official summer, okay? Purchase price or payoff, right? Let's take a look at this graphic at the top. That means we have either a purchase or a refinance transaction. We take either the purchase price or the refinance amount, we add in our improvements, and we roll that into a single mortgage. It's not a construction loan. There aren't two closings. There's only one single closing, okay? And what that means is after that single closing, that's when all your renovation work begins. You look at the fourth bullet point. The key to these types of loans that will make you a pro in no time, if we look at that second bullet point, we have familiar Fannie Mae, FHA, and VA income, asset, and credit underwriting criteria. That means you're already good with 80% of this type of loan. You already know FHA, Fannie Mae credit, income and asset guidelines, okay? We do have some overlays here at REMN, but if you're familiar with those, you've been doing business with us on those types of loans, there'll be an easy transition for you to renovation lending. The only thing you really need to learn are those new reno conditions. You already know the non-reno conditions. We don't have to worry about that, the new reno conditions. And guess what? It's not that much. Pretty straightforward. So there's nothing to fear here. Again, the work starts after closing. And after closing, you've been paid. Your real estate agent has been paid. And REMN Wholesale will take over from there, and we'll handle the draw process, right? So just to recap, no work starts until after closing. Why are you selling this product? What is the advantage? Right? Okay, well, maybe you just bought the home a year ago and now you want to put in a new kitchen. Now you want to put in that new pool in the backyard, but you have no equity in the property. Well, that's cool because, with a cash out, you wouldn't be able to do it, right? You're limited to 85% LTV. With a 203K or a HomeStyle or a VA Reno, we base the amount that we can lend off the after improved value. Okay, cash outs and home equity loans, they base how much they can lend off of the current as is value. But if we're adding a kitchen, we're adding 50 grand of value to the home, we can lend a lot higher. So these are for borrowers that have little to no equity in their current home. All right. Sorry, everyone. All right, there's my mug. There is today's agenda, just a few bullet points. Here is what is a renovation loan. Again, just want to leave this graphic up for a couple minutes. We're just going to quickly go over it again. You have your purchase price or payoff plus your improvements. We roll it into a single mortgage. And you're dealing with the same income asset and underwriting criteria as you would on a normal Fannie Mae or FHA or VA loan. We're just going to teach you the new reno conditions. The work begins after closing, and REMN will handle all those draws for you. So your broker, if you're a broker on the call, you're an AE on the call, whoever you are, just realize everyone's getting paid at closing, and it's off everyone's plate. Everyone's moving on to the next deal, and REMN's handling all the draw process, okay? So let's talk about, we talked about some of the key advantages already, right? We talked about cash out on the home equity. You don't have enough current value in the home. Let's go over hard money, personal, and credit card options, okay? Those all have much higher interest rates and shorter terms, right? Okay? A renovation loan has a 30-year term, and right now, whether it be a 2 or 3K or a HomeStyle, you're getting in somewhere in the 4s, maybe high 3s potentially, and you're able to finance that new remodel of the home. You know, maybe it's 100, 200 grand that you're doing over 30 years at a 4% interest rate. You cannot beat that, okay? And again, you can borrow a lot more because we're going off of after improved value. You also have ARM options too, so just keep that in mind. Let's talk about the forecast, where we're at today and where we're going. You know, we have to think right now about the summer because that's the next big thing coming up. You know, personally, I know just myself, I've done a couple projects around the house. Anyone I've talked to has also done a couple small projects around the house. You drive by Home Depot today, you know, over the weekend, I guarantee you Home Depot parking lot is going to be filled. There's going to be a line out the door. People have been stuck in their homes for a couple months right now, and they've been looking at their kitchens that need remodeling. They're looking at their backyards. They're saying, hey, you know what? I need a pool for the kids. My kids don't have summer camp this year. I need them to do something, keep them busy. Let's build a pool. You know, I don't like the open floor plan that I've had on this home, and now I'd like some private areas. So let's build a couple walls and make that workspace so I have, you know, some peace and quiet. So the expectation is that contractors are also dying to get back to work, make some money. Homeowners have been sitting in their homes for a couple of months. They are ready to execute on those plans that they've drawn up. And this summer, once everything is a little bit more normalized, we're already seeing the scenarios come through at a high volume. It's going to happen with the actual deals as well. And I want you guys to be able to capitalize on that. So right now is a great time to get into this and start marketing these programs because we want the deals to go to you. So again, everybody's expecting this in the industry, that this is going to be a big summer with renovation loans. Let's also take a look at, you know, some of the general bullet points behind why renovations are on the rise. Well, a huge factor happens to also be HGTV. This has been around for a very long time, but, you know, within the last 10 years, it's really empowered people to take on projects on their own and really, really ramp up their homes, right? They see the Joneses on TV, on Fixer Upper, gutting a home and making it all nice again, putting in a new kitchen, adding additional square footage. And they say, you know what, I want to do that too. A lot of these homes out there are over 40 years old and do need modernization. And really right now, they're in a lot of areas of the country, there's not a lot of housing inventory. So we need a way to fix up our current homes, right? And refinances are huge right now. And again, I said people are staying home and developing those plans. So we need to capitalize on that with the 203K refi and the HomeStyle refi, both of which, if the value comes in high enough, the borrower doesn't have to bring any money to the table. So again, you can have a really nice home, do, the home of your dreams, do all the repairs that you need and not bring any money to the table. And lastly, this goes without saying, people are moving less. They're seeing the potential of their current home versus going out there in a new neighborhood, paying a premium for a home that's already, the size that they want or, equipped with the right features that they want. They are what we say, improving versus moving. That's a term we like to use. Now let's talk about the benefits. We have everybody on the call here. We have, we don't have borrowers. It's the one thing we don't have, but we do have some of the other parties on today's call. But for the borrowers, this is a great opportunity to add value, right? Add value to a home and build instant equity, okay? You're purchasing a home and you are adding instant equity because right away you're putting in a new kitchen. Right away you're repainting the home, putting in new flooring, putting on a new roof. And before the loan is even closed, you have an after improved appraisal showing you what that after improved value is going to be. So prior to closing what kind of equity you're getting in a home. And this gives borrowers the opportunity to live in the home of their dreams, meaning, they might find a fixer-upper in the right neighborhood with the right school system that they want to live in. And the reason why they're willing to take a chance on the fixer-upper is because it's priced accordingly to what they can afford. All the other homes in the area that are nicer, they, again, come with a premium. So find an imperfect home, fix it up, live in the right neighborhood. For you real estate agents out there, this is a huge tool to be able to move those listings that have been sitting for a long time and aren't able to move because the borrower walks in during a showing and they don't like the kitchen, right? They pass on the home right away. Now's the opportunity for you to show that home, and while they're going through the home, tell them, look, you can have your new kitchen, 60 days from now. You can have the dream home that you want 60 days from now. So look at the bigger picture, right? You're going to start to see a lot more of those deals go through and a lot more of those, prospective home buyers latch onto those homes. So you got to show the potential of what the home could be. This allows you to obviously move homes faster and make more money quicker. For contractors, this is huge for you guys. This allows you to get bigger projects because we are allowing your clients to get access to a larger amount of funds. Remember, we're not basing what they can take out of a cash out, 85% LTV. No, we're going to 96.5 LTV or 95 LTV on a HomeStyle, and we're basing that on after improved value. So there's a ton of extra funds we can give to your clients so that they can, get bigger projects. And all those bids that you write up and those clients back down because they don't have the funds. Well, now your mortgage broker partner can help you out, so you can, finalize more of those deals. And again, if you do well on 203Ks and home styles, you'll probably get some more referrals, and that's good for your business. Mortgage brokers, probably the biggest cohort on today's call. This is an opportunity to differentiate yourself, okay, make yourself stand out, and really do something a little bit different from everyone else. Right now, everyone's going after the easy stuff, but the smart people on the call today are taking the opportunity to learn something that has longevity, not going away, and it will only grow from here on out, especially this upcoming summer. Now's a great time to be on today's call. It will help you fix appraisal issues. You get those appraisals that come in and, you know, the cost to cure is, you know, 15 grand. Well, you can fix that with a 203K or a home style, right? That's too large for a simple repair escrow that the borrower or the seller funds. You need a full-on rental. You can also get increased commissions, right? Because, you know, say they do 100 grand in a project, you're getting that much more of a loan amount, and your commission increases. Not only that, but if your first loan is a purchase, your second loan could be a refi out of that higher renovation rate, and you get a second commission. Okay, so there's always the potential for 2 commissions on these loans. And again, if you do a good job, you get increased referrals. You'll be known as the renovation person in your area. And likely, if you're good at it, you know, because you have a good partner with REMN, and there's good communication with us and you, you'll start to get a lot more of these deals. All right, so let's talk about the process. I know we wasted a little bit of time before, so I'm going to run through this a little quicker. You either have a purchase or refi. We're going to choose the program, 203K, limited, standard. We have the Fannie Mae home style. We also have the VA Reno. However, I will mention that that has been temporarily suspended by VA, not REMN. So no one can do this type of loan right now. Appraisers are not allowed out to do VA rentals. Hopefully we'll have that back up and running shortly, but for right now, we can't do it. The next thing that happens is a contractor is found. Your borrower has to go out and find a contractor. They have to give us a bid. They have to be licensed, insured, and experienced, right? So we want someone who is reputable. We don't want, you know, a handyman with very little experience and who's not licensed. If the project is large enough, we ask you to hire a HUD consultant as well. Okay, we'll get into that a little bit later. Then we determine the loan amount. So your AE or myself can help you determine that loan amount. We run through an Excel worksheet. We put that together. We run it through your Calyx port, your Encompass, and then we run DU. We submit the file. Currently, turn times have not been at 24 hours for initial underwrite, only because of the volume. So you're probably looking at 48 hours right now, I believe, on renovation submissions, at least on purchases. Refis might be a little bit longer, but still, we can close these loans in 45 to 60 days. And for your first reno loan, you should be pitching to your agents 60 days on a closing. You should. We can do them in 45. Definitely don't do it in 30 on your first one. Okay. Then we order the appraisal. So that means we're giving the appraiser the contractor's bid. They're going out and they are developing the after improved value, right? Talked about that before. Then we are clearing our STIP sheet. We're clearing the conditions that include our non-reno conditions and now our new reno conditions. We go to clear to close the loan, fund it, and then our post-closing team takes over. They'll do a call with the borrower and the contractor, and if needed, the HUD consultant, and let them know that they can start doing work. All right, so there is the process in a nutshell. Let's go over the roles really quickly. We have our contractor. Again, they need to be reputable, licensed, insured, and experienced. We should avoid, my cousin Vinny, any family members, self-help work. Yes, we can do that kind of stuff, but you don't want to go down that path if you can avoid it. You really want, a little separation between, your borrower and who their contractor is. But if you have, a qualified borrower who is a contractor themselves, we can entertain self-help work, and we can also entertain family members on a Fannie Mae HomeStyle. Then we have a HUD consultant. Okay, I love highlighting these guys because these guys just make our process so much smoother. So when in doubt, always get a HUD consultant. Okay, these guys really help out the transaction. They're a third party that will work with our borrower and our contractor to make sure that the numbers are in line and the project is feasible for the costs that the contractor, put down on their bid, right? If something is out of line or if we're missing required items, the HUD consultant's going to jump in and they're going to, they're going to say something, right? So at the end of the day, when we hire a HUD consultant, they're a benefit for the lender, the broker, and the borrower. They're a set of eyes and ears that have boots on the ground in the area of the country that we're doing the loan, right? And they will help kind of facilitate the draw process on the post-closing end. That contractor is not getting paid until the HUD consultant says their work has been done properly, right? So, for $500 to $1,000, your HUD consultant is making sure that this process is running smoothly. Okay, and we do have scenarios where we want a HUD consultant. Above $35K in total renovation costs, we want a HUD consultant on a 203K. And above $15K on a HomeStyle, we want a HUD consultant. And if there's anything lower than that, but it's structural work in nature, we want a HUD consultant. And again, they are not bad things. You should learn how to sell the HUD consultant. They will make your lives easier on these loans. And lastly, we have the draw department. Okay, they work here at REMN Wholesale. And again, they call our borrowers, our contractors, our HUD consultants once the loan closes and let everyone know that, the work can begin and here's how the draw process will work. Okay, so let's talk about simple renovation math. All right, on a purchase, this is a basic scenario. We're taking the down payment does not come off of solely the purchase price. It comes off the purchase price plus total renovation costs. So in this scenario, we have $100,000 purchase price plus $50,000 in total renovation costs for total cost of $150K times 96.5% LTV on a 203K, and we are at a loan amount of $144,750 with a down payment of $5,250. All right, so again, on a purchase, down payment is based off of purchase price plus total renovation costs. On a refinance, and we're using a Fannie Mae HomeStyle example, we have an after improved value of $200,000 and times our max LTV of 95%, we can lend out a max loan amount of $190,000. But since our payoff is only $100,000 and our total renovation costs are only $50,000, and even our closing costs are only $10,000 for a total cost of $160,000, we can essentially come to the table with no money as a borrower. We have enough value there after improved so that this borrower doesn't have to bring a dime down, and they're doing $50,000 worth of renovation costs. So that's huge. When we talk about total renovation costs, I just want you to keep in mind that it's not all about what's on the bid, right? So if a contractor gives you a bid for $200,000 in this example, That's not it. We also have to finance in a 10% contingency. Okay, sometimes it's 15%, but generally it's 10%. That means we have some extra money, some extra wiggle room, just in case the contractor, overruns on budget, or they're doing work and they find some other repairs that are needed. We have 20 grand to play with. Now, if that's not used, we can give it back towards a principal reduction after all the work has been completed. We're also going to finance in our permit costs, any architect's plans. We'll also finance in the HUD consultant's fee, any inspection fees that they charge. And lastly, this is huge. If you are doing a full gut rehab and you can't live in the home, okay, we don't want you to make a mortgage payment on your new subject property and your rent payment where you're living currently. So we will allow the borrower to roll in up to 6 months mortgage payments, right? So that they don't have to make 2 payments at the same time. And this is, of course, only allowed if the home is actually uninhabitable during the period of renovations. So, with all that being said, your $200,000 bid turns into $235,000 that we will be financing in. So let's talk about what we have to offer here at REMN Wholesale. We have the 203K Limited, the 203K Standard. Okay, one is for limited work under 35K. The other is for work involving a HUD consultant over 35K, possibly structural. We have the Fannie Mae HomeStyle. And lastly, we have the VA Reno, which is on hold. We can't do that right now. VA has that on hold. Let's talk about a little bit of the details of each program. 203K Limited and Standard, they're virtually the same in terms of LTV, 96.5 on a purchase, 97.75 on a refi. Primaries only, 1 to 4 units. Fannie Mae HomeStyle, we can actually do not only 1 to 4 unit primaries, but we can do second homes and investment properties too. So if you have people wanting to do fix and flips or fix and holds, we have a home for those deals. It can be only 1 unit though. Okay, so keep that in mind. And on the VA Reno, we can do 1 unit primaries only, 100% financing on purchase and refinance transactions. Again, that program is on hold, so we can't do that right now. Let's talk about, breaking that down a little bit further. What else is entailed on a 203K Limited Standard? We have MI for the life of the loan, just like a standard 203B. On a Fannie Mae HomeStyle, there's no MI at 80% LTV. Okay. On 203K, we follow the same standard FHA credit guide. And on a Fannie Mae HomeStyle, it's per DU approved eligible only. Okay. 203K Limited, 203K Standard. We are going to nix the third bullet point there. We're not doing credit scores down to 550 during this time. We're only going down to 620. So just a reminder, what you see on the screen is not relevant right now. We're going down to 620 right now on these deals, 620. Okay, but we can do manual underwrites. If you have any questions, email me, email webinars@remn.com, or email your account executive. On a Fannie Mae HomeStyle, we'll take whatever credit score DU accepts. And on the VA Reno, which we can't do right now, we are also pausing at 620. Okay? Well, what kind of work can you do with these programs? Well, I'll just start off by saying you can pretty much do anything in terms of renovations, just which product can you do it with. Okay, so the 203K Limited is for smaller cosmetic projects under $35,000, no structural repairs. Okay, on a 203K Standard, it's over $35,000, or there's structural repairs. There's really no loan limit, or I should say, repair limit that you have on a 203K. You can do $300,000 worth of work if the borrower wants. You just have to stay within the county loan limit for the area. Both of those require that the work be completed within 6 months of closing. Okay? And with the HomeStyle, it's the same. We require that the work be completed within 6 months in closing. We do have a cap on how much work can be done on a Fannie Mae HomeStyle, and that is limited to 75% of the after improved value. Okay? And that really never is an issue. But for example, if your property comes in after improved at $200,000 and your repairs are $180,000, for example, you are clearly over the 75% limit, and we can't do that. Okay, that's basically an issue when we're buying a home that is essentially being rebuilt. We're buying a really discounted property and we're kind of rebuilding it. That's when you're going to run into that issue. Otherwise, no issues on that. And we do require, again, a consultant over $15,000. VA Reno, this is for small, minor projects that must be completed within 90 days of closing. 90 days of closing, and we don't want a HUD consultant on those deals. We want these to be easy renovation deals. But again, we're not doing those right now, so nothing to worry about there. Let's talk about a general list of eligible renovations. Okay, so you can pretty much do anything, like I said. That includes roofing and siding, foundation work, plumbing and electric, flooring, huge kitchen and bathroom remodeling. You can finance in appliances, right? So you're doing a new kitchen, you want a new stove, a new refrigerator, top of the line, you can finance those in. Moving over to the right, we can do fencing. Okay, we're getting a lot of requests right now for new fencing, new decks, new patios, porches, again, anything really structural. Let's talk about a few items that we like to highlight here that you might be able to sink your teeth into, depending on where you live and what your market is. We do allow for high balance loan limits. So if you're in an area that's high cost, we can go up to the high balance loan limit. We just can't go over into jumbo land. We can't do that. If you see a lot of manufactured housing, we can do renovations on manufactured houses. Pretty cool. This is huge out in California and some other areas of the country, but we can build accessory dwelling units, AKA granny flats, mother-in-law suites. You have parents that, you want to have come live with you, but you want space for them. You can go ahead and build an ADU. This is huge, and by itself can get you a lot of deals. You can also build garages. So if you're in an area where there's a lot of garages being built, go ahead, be the garage person in your area. Hook up with a garage contractor and, get some deals in. You can also hook up with a builder that does, expansion of units and adding second floors, additions. You can build upwards, you can build outwards. You can do all that. So if you have a kid and you need new room for the kid, go ahead and build it. Okay. We can allow for landscaping as well, especially on the HomeStyle. We can do an outdoor oasis if needed, right? We can do, a pool, a barbecue pit, and a sauna, right? We can do all that. Again, it's got to comp out, right? It's got to have value increase, but we can do all of it. Solar energy financing, okay, this is getting hot in some areas. We can finance that. Pace Hero loan payoff, that's popular in California. The work has already been done. We can refinance and pay off that Pace or Hero loan with a reno. We can also finish new constructions of a new home somehow stopped and it's greater than 90% completion, we can come in to the rescue with the rental loan and finish that project up. And again, it's not new construction rate. And we can finish incomplete projects. We bail people out a lot who start projects on their own. They think they have the funds, then they run out of funds, and then they say, hey, REMN Wholesale, we need you to come to the rescue. We need to finish this. So we do the after improved value, and we can give them some more funds to complete that project. Pools and spas, okay, just mentioned it. This is going to be wildly popular this summer. So I've already talked to multiple people hooking up with pool companies in the area that they live, and you might be able to get some deals here. Pools are not cheap, right? Talking to a guy out in Arizona the other day, he told me that everybody's building up their backyards now. They start at 50 grand, right? And these people can put up to 200,000 into their backyards, right? So, think Fannie Mae HomeStyle with that. Other luxury items, tennis courts, basketball courts, we can do that as well. And again, do-it-yourself repairs we can do. It has to be a qualified borrower, though. Can't be, a guy who does mortgages for a living who wants to do a gut rehab. We can't do that. Has to be seasoned contractor. And let's talk about now why REMN. So again, 24-hour underwrites typically, not today. Okay, typically we're doing 24-hour underwrites on purchases. That has lagged a little bit because of what's going on in volume. So talk to your AE or myself after the call about what it is today. We also have, we look over to the right, we did the most volume in renovation lending in 2018, and we're on track to have a very, very, very good year in 2020 from what I see. And we have all the support that you need. Our reputation is pretty good out there for being a lender that communicates. And when you have a renovation loan, the first thing you want is a lender that communicates. And that means an AE communicates. We have assistants that communicate. We have a great help desk with a chat feature that will help you out on scenarios. And then again, on post-closing, we have a great concierge desk who talks to the borrower and contractors. And lastly, we have, crazy amount of marketing for you. Lisa, who's on the call, she's fantastic and, helped out with the majority of the marketing stuff that we have on Flyer Paradise. Talk to your AE about getting credentials. You can get customized, flyers for HomeStyle and 203K and VA Reno that have your name and company logo on them. So lastly, let's talk about getting your first deal. This is probably the most important thing. And I don't want you to stress out. The key thing is to just get a ballpark idea of the work, the type of the work, and also get an estimated dollar amount on, how much it's going to cost. So, when having your conversations with your borrowers or your brokers or your AEs, we need to discuss, hey, is it a kitchen remodel? Is it a pool installation? Are we gutting the house? Are we doing something that involves architect plans? Just a casual conversation, right? And how much is that? Is that $5,000? Is that $100,000? Okay, it's all relevant to which program we go with and how we structure the deal. But you don't need to get overwhelmed. Just get a ballpark idea. Also get a ballpark idea of the after improved value. Once we do all this, how much is the home going to appraise for? And then call your AE or myself to discuss, and we'll help you through packaging up the loan, submitting it to us, and getting it closed. Again, we're great communicators here at REMN Wholesale, so we like to, hold your hand on the first one. So again, get in contact with your AE, and we can all have a three-way call to discuss your scenario. And then this is it. Just like to thank you for coming today. Sorry for the delay earlier. Again, if you have any questions, shoot them over to webinars@REMNWholesale.com. You need help with Flyer Paradise setup. You need a list of contractors in your area that we've previously dealt with. And if you want to set up a follow-up call or team training, any of that stuff, anything whatsoever, just email webinars@remn.com. With that being said, I'd like to again thank you for coming out today. I hope to be working with all of you, and I look forward to a fruitful summer with renovation lending. Have a good day, everyone.